All right, fam. Top of the top, 500K trade. I'm just tapping in. So I just want to talk on a few different things. Okay, the first things that I want to talk on is the cost of commissions when it comes to trading exclusively and specifically the micro gold contracts, micro gold futures contracts. Okay, so the broker that I do trade with, if you don't already follow me in the Black House 500K group, you tripping. All right, definitely going and join the Telegram, join the group Black House 500K, and we about to touch this 500K. Okay, so let's get into it. So the broker that I trade with is AMP Futures or AMP Global, okay, and I do trade. My data provider is CQG, and I do trade with Quantower. So Quantower is this platform right here. I absolutely love it. Okay, you get access to the time and statistics, the delta. You get the volume, the buy volume, the sell volume, the delta, the max delta, the min delta, and the cumulative volume delta. Okay, you also have time to the time and I apologize, not the time and sales, but the dome, or you can call it Dom, however you want. And then you also have access to the Dome Levels heat map. Okay, so the Dome Levels heat map actually, I don't know why it's tripping right now. Okay, this is on MNQ, but let's look at gold. All right, so this is the dome levels heat map. Okay, it's just letting me see the hot and cold levels when it comes to the levels that orders are sitting on the bid and the offer. Okay, as you can see, we got around. That's why you see this hot red is because we have a lot of contracts sitting on the offer right now, looking to take this market higher. Right, 57 contracts at 410. All right, 58 contracts. Now they're loading up. Okay, so this technically this could be a key level for some to maybe enter the market long. Okay, but that's not what I really wanted to talk about. I'm just letting you know the broker that I do trade with, and the platform that I use to trade with, which is Quantower. So this is the actually order flow, so I can see the order and the volume that's going into every single contract. All right, not contract, but every single candlestick. Now, when it comes to, give me a second. Now, when it comes to the actual commissions of just trading gold exclusively, okay, micro gold contracts, that is, this is the little brother to the big brother, which is gold, okay? So I'll be transferring over to gold. My intention is to do it in the next 6 months. Okay, so we have to stay very focused. Okay, but right now we're gonna trade the little bro. So the little brother to the big brother, which is the micro gold futures contracts. Okay, so it's going to be 85 cents per side, $1.70 round term. So what does that mean? Okay, so if we go here to our broker, okay, let's just say we want to open up 5 contracts long. Okay, so 5 contracts long 5 contracts long or short, it doesn't matter. They're going to charge us $1.70 per contract to open up 5 contracts. So, well, what is that? So, $5 times, that's $6.70. I apologize. Is that right? 5 times 1.7. No, I apologize. $8.50. I stand corrected. So to open up 5 contracts long, okay, and at some point you're going to have to close those contracts, okay. So for example, if I want to long this market, okay, if I want to long this market at 5 contracts at 30 points, just the cost of that trade for 30 points at 5 contracts is going to be $150. Now, the commission for your broker to make money is going to be an extra $8.50. Why? Because they're charging you 85 cents per side, which is to open a contract and then to close it. And then basically, it's right here. They're charging you 85 cents to open the contract, and then they're charging you 85 cents to close the contract. So round term is $1.70. So you just do 170 times however many contracts you want to put on that trade to enter the auction. Okay, and then you just do that times 285. So 170 times however many contracts, and then you'll get how much it'll cost you on commission. Okay. Now let's get into Today's move on gold. All right. Today's move on gold gave us two beautiful trades. Okay, that I was not able to catch because I was just on the wrong side of the market today. I did take two losses short. All right, and my system, I can only take two losses throughout the day. Why? Because I understand I done got my ass whooped long enough. I've been doing this for the last 4.5 years. I understand that the name of the game is survival, right? There's always going to be an infinite amount of trades, but what is not infinite is your capital. All right. So you have to choose your battles wisely, and the first aim is always survival. So I survived and we can come back tomorrow. Okay. But when it comes down to what am I looking for? I'm looking for something very, very, very simple that I can execute daily. All right. And if I don't see it, then I just won't take a trade. But let's get into what do I see this morning. Okay. So the first trade took place just at, just slightly after pre-market New York open. So the trade took place and entered at 5:12 a.m. Obviously, we know pre-market open is 5 a.m. PST because I do live in LA. Um, and that would be 8 a.m. EST, Eastern Standard Time. Okay, so what I'm looking for on a lower time frame is a 1 to 5 minute sub X swap. Okay, and that would be bullish or bearish. So in this case, this is a 1 minute sub X bull swap. Okay. Now, when I say a 1 minute sub X bull swap, as you can see, what am I talking about? So we have a break of structure right here. We have a break of structure. All right. We have a break of structure. Then we have another break of structure. And this bullish momentum was the break of London high. Okay. Now, this is the swap that happens. So sellers came back down to retest this level, okay, and buyers swapped out with the stronger and more dominant hand. Okay. So we came to retest this level. Okay. That was the break of New York, I apologize, London high. All right. And that level was 82 and a half. Okay. 382 and a half. Sellers came back down to retest this level. We came back into this 1 minute demand. Okay. And we swapped out from weak to strong hand, and buyers took this market and ran for 150 points. Okay. Now, this level right here, 96 and a half, if we go to the higher time frame, okay, this right here, 96 and a half, okay, 96 and a half is the EQ level of this higher time frame 4 hour supply zone. Okay, so this 4 hour supply zone, we came to mitigate it multiple times. Okay, and today we pushed up into the EQ level. All right, the EQ level is basically the half point between the high and low of whatever zone you have. Okay, the EQ is short for equilibrium. Okay, the EQ level. Okay, the half point between the high and the low of this zone is where I was targeting, or is where the market ran, because I didn't catch this trade, but it's always good to understand how your system is performing and how many opportunities you can identify in that session that you trade. So this happened. This was the first session, the first trade that took place that falls within our criteria, our system, okay, during New York, and that ran for 150 points with a 30-point stop. I will not allow myself to be in any trade where my stop is bigger than 30 points. If it has to be bigger than 30 points, then it's just not a good entry. Okay, so that ran for 150 points, and then we have another one. So this is I took a short here at this level right here, and then I was stopped out for 30 points. However, the market came back to retest this level. Okay, so we have a little bit of manipulation. All right, we came in, we broke that high. All right, this level of demand was broken. If you took that, you were stopped out. Okay, we have another level right here. Okay, where price came down to retest the sub X level. Okay, buyers came, broke that high, and then sellers came aggressively. We broke this level of demand, and we broke this level of demand, and we swept this low liquidity sweep. So you could have took 96.5. That would have been a legitimate entry. 96.5 probably cover the high. Let me see how much is this. Yeah, you could have took 96.5, gave yourself 30 points. That would have been a legitimate entry, but ultimately you were stopped out. I took this level right here. Okay, so I took this level right here. I gave myself 30 points from here. Gave myself 30 points. My stop was right here, and I was stopped out. However, I was just on the wrong side. It's all good, okay? But look how the market came back to retest this level beautifully, okay? So the market, so this was the high. We pushed down, and then we came and broke this high. Okay, if we draw this zone out, this level, the sub X level, okay, this is at 98 and a half, 398 and a half, okay? We came back down to retest this level. We give ourselves 30 points. Okay. And we gave ourselves 150. We give ourselves 150 points in our favor. Now, I'm always looking to catch minimum 3R on this setup. So minimum 3R would be 90 points. Okay. 90 points is 3R. I would not get into any trade if I can't get a minimum of 3R out of it. So 90 points, 120 is 4R, and then 150 points is 5R. Beautiful trade. Okay. Now, 5R, what is this green level, right? Because it's not just, I'm just throwing my target out saying, oh, I want to catch these levels. These are key levels that I see where the market could actually be attracted to coming to target. So this level, this green line right here at 413, okay, this is this high right here on the 4 hour. Okay. So we have a huge support and resistance level, okay, at 63. All right, so we bounced off of that. We came back up into this level of consolidation, as you can see, is being strong, used as a strong level of resistance. Look how many times we keep trying to wick up there, and sellers are defending it properly. So we came back down into this level of support. We pushed back up into this level, and then sellers were obviously successful again in pushing this market down. Came back down a level of support. We came back up to it, and then sellers were obviously successful again at defending, and we pushed it down into this higher time frame external range liquidity trend line. All right, and so when we opened up the market, I said this is possibly where the market could come to break, and that's exactly where we came today. All right. Now, um, so if we go back down to the 1 minute time frame, okay, as you can see, it happened. The trade played out again. All right, 5R. All right, 5R on a 1 minute sub X bull swap. All right, why am I calling it a bull swap? Obviously, because this is a bullish, this is a bullish, this is a bullish play. All right, in the auction. All right, we went long. All right. Now the opposite obviously would be a 1 to 5 minute sub X bear swap. Okay. On the opposite side of the spectrum. But on this one, we're just talking about, right, the market went long this morning. So those are two opportunities. Like I said, I was stopped out twice. Okay. So I didn't catch it, but it's just always good to understand how your system is setting up, or the entry criteria is setting up through that given session. Okay. So if you haven't already, take the time to follow me right now at Blackhouse 500K. All right, in Telegram, and follow me on YouTube at 500K Trey. All right, subscribe to the YouTube channel, and definitely subscribe to or join the Blackhouse 500K group. All right, remember, okay, and I'm gonna just leave you with this. All right, I have it here. Black House Management, New Era Advisors. Okay, remember, our profession is to manage the downside cost of printing high side returns of money consistently. Done correctly, well, an abundance of fruit awaits us. Godspeed. All praise to the Most High. 500K Trey, we out. Let's run this bag up. 500K.